Gonna go ahead and get the recording started. Mike, Yetta did ask a really good question. So while we're waiting, I know she said for later, but I think since we have some time as we wait for things to get started, I was wondering if you could answer it for us. She said that she had a conversation with a client about Section 8 down payment assistance or qualifying homeownership. Yetta, was there something specific with that you were curious about, or just in general?
I think her question is, can you get down payment assistance for Section 8 housing? That may have been your question yet, I believe.
That's what she said. Yes, just in
Yeah,
general, yes.
I believe so, but that's really a loan officer question. I would defer to Alexa, or who else is on so far?
So
Jerome.
we have Alexa and Jerome. So Alexa and Jerome, you
I,
you
I,
are
I do recall someone having a conversation about that in Coffee with Kevin, but I don't recall the exact answer. So if no one here can answer that yet, we will get back to you on that.
yeah, absolutely. And I am seeing a few more people pop in. See Brandon. Brandon's in here twice. I'm curious how that's going. um,
Brandon Rowley might know the answer to that question. Brandon, do you see the question in the chat about can you get qualify for down payment assistance for Section 8 housing? You have to unmute Brandon Payton.
I'm not sure which one is Brandon, so I'll just allow both to speak
Well, you
here.
can,
I also turned it on just for everyone. Everyone should be able to use the chat now. So if you have questions or if Brandon, you don't want to unmute and you just want to throw it in the chat when you get a chance, feel free to do that. We are having a lot of people pop in, Mike. So it's 6:01. So I think we give it
let's
another.
give it a couple more minutes. And
Yeah, absolutely.
Brandon, were you able to hear my question? I don't know.
Unsure, but yet we will follow up with somebody or connect with your loan officer partner if somebody doesn't hop in the chat quicker.
And I think it's fine if you just want to unmute everyone, Peyton, and people can interrupt at any time to pop a question out. It's usually
Yeah,
what I do in my classes anyway.
yeah. I will go ahead and allow everyone the chance to unmute if they do so wish. Oh, thank you, Jerome. Jerome said Section 8 housing voucher can be used.
It can.
Yes, it can.
Great.
All right. You sure?
Can you guys hear me now?
Yes,
Yes, we
thank
can
you.
hear you.
Yeah. Yeah. So two things to consider. Typically the housing Section 8 housing voucher is designed for rental. There's a matrix that can be used, and so it's zip code specific. So if you are planning to use it to buy, you have to have a pre-approval as well. You have to count on that. You'd want to make sure that your voucher will be the same amount that you get for the rental. And we've seen them go both directions on that. Sometimes they're better when you purchase, and sometimes they're less. So you just have to be really careful with that piece as part of the approval process.
Thanks, Jerome.
Thank you. All right, Mike, it is 6:02. We are slowly having more and more people pop in the chat, so we can go ahead and get started, and hopefully more people will interrupt. So I will do like a formal introduction. So thank you everyone for joining us today for Credit Essentials. This is brought to us by Mike McNamara, Southern Trust's resident credit specialist and expert here. He is a great resource that we have here at Southern Trust, and we are really excited to have him on here today to answer any of your questions. As you saw, if you were here a little bit early, we are taking questions in the chat, but also ask you to unmute if you feel comfortable. Feel free to stop us at any point. We are hoping that we keep this conversation open to answer any questions that anybody has about credit, but we will also have time at the end to answer any additional questions. So without further ado, I'm going to pass this off to Mike to continue teaching us more about credit.
Awesome. Thank you, Peyton. And I guess I'd like to know the audience. Can I see a show of hands of how many consumers, potential buyers that we have on today? Or Yeah, you could raise your hand if you're a buyer,
Or if you're looking to buy in the near
yeah,
future,
as
current
opposed
renters.
to an agent or a,
We do have a lot of loan officers, a lot of familiar names in the chat.
all right, good.
We have a few. I'm seeing some hand raise. Thank you, Crystal, for sharing.
So there's a few home buyers, good, because this is really going to be geared towards the home buyer. Um, my presentation could last 4 hours. I have enough material in this PowerPoint because I teach realtor CE classes in about 7 states, and in North Carolina, they're all 4 hours. So I have enough data here for 4 hours. We're only here till 7, but so you'll see us skip through some slides because we want to really hone in on the ones that apply more toward the buyer. Um, I've done a lot of home buyer seminars over the years, and many times the buyers think their credit's not good enough or they don't have the resources to buy. Well, surprisingly, their score wasn't as bad as they thought, and we were able to rapidly increase their score. And we'll talk about how we do that. And then we have all the grants, and the loan officers on the call here with us tonight can talk about all the different grants we have available for first-time home buyers. Um, so a lot of times we can get folks into homes who don't think they're ready or don't think they're qualifiable, and we can get them going. So as you see on the first slide, 40 years of dealing with credit and specifically mortgage credit, over 30 years with the credit bureau and 8 years now with Southern Trust. And my role at Southern Trust really is when a loan officer has a potential buyer, they're going to send it to me and I'm going to analyze their credit and give them a plan in writing in a letter format that the loan officer forwards on to the potential buyer with a plan. Hey, your score is 580, but we think we can get you to 640 to get you qualified for a first time home buyer grant. And we can do it in a matter of 3 days if you're able to take care of these items that we supply you. And then what I do is what's called a rapid rescore. And I submit what documents the buyer gets me. Maybe they paid off a credit card. Maybe they paid a collection and got a deletion letter, which I coach them through that plan that we provide on how to get that deletion letter. I show them live examples of other deletion letters for a collection. Because if you pay a collection, your score could drop in the short term. We need to get it paid and removed permanently. And we have lots of samples that we share with buyers to show them exactly how to get that letter. And then the third part of my job is I teach a lot of Realtor CE continuing education courses. So you can go ahead and move on, Peyton. Or do I have the ability to move on? No, I think you have control, right?
I'm gonna run it today. So whenever you're ready to go in, just give me a signal and I'll keep going
Gotcha.
for our slides today.
So this site I encourage every buyer to go to right now, before you even get with your realtor, before you even start talking to Southern Trust about a mortgage, go to annualcreditreport.com. It's down here towards the bottom of this slide. And get a free copy of Equifax, a free copy of TransUnion, and a free copy of Experian separately. And when you go to, and when you, it's called annual credit report because the government mandated that those three credit bureaus have to give us a free copy once a year. Well, it recently got changed to once a week, and that became permanent. So now it's once a week we can go to this site, annual credit report. And when you go there, you say, I want to get my Experian. It takes you to Experian. They ask a few security questions, which you have to get correct. And then once you get it correct, you can get your Experian report right on the screen and print it. And it gives you an exclusive report number for Experian that you can take to their website and start investigations. Hey, I never lived at this address. Remove it. This account's not mine, it's my brother's or my sister's. You can start investigations, but you have to go to annual credit report. Then you go back to annual credit report and say, I want my TransUnion. And they'll ask you some security questions. And once you get them correct, you'll get your TransUnion. Excuse me. And that will have an exclusive TransUnion report number. This is why I want to tell you don't get all three at once because then you have no way to communicate with them separately. And then again, you go back to annual credit report and get the third TransUnion report and do the same thing. So it allows you to communicate with the three bureaus separately to get things fixed early on in the process. Or maybe there's nothing to fix. Maybe you should just check it and make sure everything's okay with your report. You can see your balances. I would not recommend getting your credit score there for two reasons. One is they'll charge you for the credit score, and it's the same credit score you get for free from your bank or Credit Karma or from Discover or Capital One. Everybody's giving us a free score. There's no need to pay for your score. And the second reason, it's usually FICO 8 or FICO 9. It could be FICO 10 or Vantage 4.0 score. They're not the same scores that the mortgage companies have to use. So again, just get a free copy of each of the credit reports, review them, make sure there's nothing there alarming. I can tell you many, many years, borrowers have told us, oh, I didn't even know that medical collection was on my report until they applied for a mortgage. So it's a good idea to go here first, review it, and see if there's any red flags that you need to take care of. I go there now all the time to check since it's once a week. I told them to delete my cell phone because that's how you get spam on your cell phone. People buy that from the credit bureaus, and we'll talk about what else they buy. I mean, what they sell to people, data that's on our credit reports, and how we can stop that. Um, Go ahead and go to the next slide, if you will, Peyton.
Quick question for you,
Sure.
Mike, before we hop off of this. So you did
Mhm.
mention not to do all three at one time. Do you have a recommended spacing of how frequently you should go? I know it's free every week, but should you do like one each day, or how would you space them out if you're going to check all three? If that makes
Well,
sense.
and yeah, I mean, it depends on your situation. If you're trying to see if something got showed, that's going to show as paid, and you check Experian on Monday and it's not paid, you might want to wait a few days and then pull the second one and see, it depends what your goal is. Um, but really, you could get all three the same day and then wait till next week and get all three again. I'm checking mine probably once a month for a couple reasons, which I'll explain later. Why I go there still, even though I'm not applying for a mortgage, I go there to look at things.
Perfect. All right.
All right, effective. This is great news for buyers. If you had any medical collections on your report, um, the three credit bureaus put a policy in place. It's not a law, that it's a policy that when a consumer pays a medical collection, once the credit bureau gets notified that it's paid, they remove it permanently. And any medical collection under $500 is no longer reported. If you previously had a medical collection on your report that was under 500, it's been deleted. It's gone. So this is really good news. It's helping buyers' scores get increased very quickly because, if we recommend, hey, pay this medical collection, it's going to fall off within a couple weeks. And if we're trying to get your, mortgage closed next week, we'll have you get a removal letter and we'll do a rapid rescore to speed up that process. But it is really good news that once it's paid, it gets deleted. So I just mentioned a moment ago that the credit bureaus sell our information. This is why we get junk mail that you're pre-approved for this credit card, or you get lots of pre-approvals. They're not really a firm offer of credit until they pull your credit report. But they're buying a list from the credit bureaus. The experience, hey, Discover, you should pre-approve all these people, and you get junk mail because of that. They also sell data that's on your report, like inquiries. When you apply for something, that inquiry is identified for its purpose. In other words, if you go to a car dealer and they pull your credit report, embedded in that car dealer's account number identifies that inquiry that you're applying for a car loan. So when you apply for a mortgage, it's also identified with an MTG when a lender pulls your credit, your Equifax or your Experian or TransUnion. So they sell that inquiry, and you could get phone calls from all over the country as soon as you apply for something, trying to tell you they can give you a better deal or whatever. I've had people get 75 phone calls within a week after applying for a mortgage. They also sell cell numbers. That's why we get junk text on our cell phones. So when I go to annual credit report, I told them that's not my cell number, remove it, even though it is my cell number. But I got that cell number removed so it can't be sold. And I don't get very many text or junk phone spam calls at all anymore. Um, but the most important part about this slide is that every buyer should do is go to optoutprescreen.com. It's a secure site, has an HTTPS, or you can call the phone number and opt out for 5 years. And the reason I say opt out for 5 years is because we need it to happen right away so that you don't get a million phone calls once you apply for a mortgage or apply for a car or whatever you're applying for. Once we get you in a house and get a mortgage and your realtor gets you into the home, then you can opt out permanently by mail. Um, you can always opt back in too if you like getting the junk mail. At this website, you could do either. But I highly recommend everyone do that. Our mortgage company, Southern Trust Mortgage, we've taken additional steps. If you can go to the next slide, Peyton,
We
we
do have
do
a
what's
question really
called
quick,
a
if you don't mind.
soft inquiry before and we tell the buyer, hey, if you haven't opted out, go ahead and opt out now after this soft pull. And see, we do, and the difference between a hard pull and a soft inquiry has no impact on your score, and it's not sold. They can't be sold. So our loan officers do a soft inquiry. We analyze the report, put a plan together for the buyer. We tell them to opt out at that time, and then we wait 5 days for it to hit, and then we do the hard pull that we need for closing down the road. So we have to do the hard inquiry later. A hard inquiry means you've applied for credit. That can impact your score a little bit, whereas soft pull, very little impact, no impact on your score. And examples are here on this slide. When your bank gives you your score, that's a consumer score. That's a soft pull. That's not really what the mortgage companies are going to use. These are all examples over here on the right of what the mortgage companies have to use. These guys use FICO 8, 9, and 10. We have to use FICO 2, 4, and 5. Completely different than what you get from your bank. So if Capital One gives you your credit score and it says it's 620, when the mortgage company pulls it, it could be 570. It could be a lot different. I see a hand went up, Sierra.
Yeah, I just wanted to throw that in there. Sierra, I had to mute you for 1 second just so I could get to a good stopping point. But if you want to unmute yourself and go ahead and ask your question if you had one, the floor is yours. I don't know if she knows that she's muted again.
Are you
Sierra, did
allowed
you
to,
have a question?
can
I
you
did,
unmute her? No?
I did ask to unmute. We can't unmute for them.
Oh, I thought you could.
Well, we will keep going. Sierra, if
Okay.
you unmute or want to stop us at some point to answer your or ask your question, feel free to unmute or throw it in the chat. All right, I guess we'll keep going, Mike.
Okay. So, yep. So just keep in mind that if you do get your score from any of those places on the left, it could be significantly different. I always like to tell you that the lower the score, the bigger difference between these models. So if your bank says your credit score is your FICO 8, which is probably what they're going to give you, is 600, we could get low 500s. If your credit card company or your Credit Karma says your score is 750, the mortgage scores that we have to use are going to be pretty close to 750. It's more the lower end scores. And the reason is these scores on the left, they don't count negative information as much as the mortgage scores do. And if your score is low, you're going to have negative information. So the lower the score, again, the bigger gap between these models that the mortgage companies have to use and that what's out there that everybody's given us for free. Sierra's hand might have been up stating that she was a home buyer instead of an agent.
That's all good. I'll lower it for now. She
Yeah,
wants to ask. We are all ears.
perfect. All right. So there are some newer scores that are hopefully coming soon. They were supposed to come back in 2025, but some things changed, and we're still stuck with those using those older scores, the FICO 2, 4, and 5. But these are the Advantage 4.0 is not a FICO score. It's a score developed by the three credit bureaus, Equifax, Experian, and TransUnion, in competition to FICO. And we could use that, but it's just not tested yet. So once investors that buy mortgages and everybody that's comfortable gets comfortable with the Vantage 4.0, we could start using it. FICO 10T is not approved for the mortgage industry yet, um, but some of the benefits you can see there on the right of these newer models, if we ever get to that point, it will really help a lot of buyers. Go ahead, Peyton. You can skip through that too. That's more for the realtors. All right. So the ideal way to get your scores up is to address the things that are on this left-hand side here. Keeping your balances low, rarely open new accounts. You don't want a bunch of new accounts. And the key thing is keeping your bills current. The credit bureaus don't report you late until you're 30 days late. They report 30, 60, 90, 120, 180, and then it gets charged off. But one 30-day late could drop a score 40 points or more. So you really want to keep those accounts current. And a lot of times what happens is when folks get into consumer counseling or they get mixed up with a credit repair company who negotiates a lower payment, well, guess what? You're not making the minimum payments and you're accruing a bunch of recent lates that are killing your credit score. It might be helping you get rid of debt, but it's killing your credit in the meantime. So ideally, we want you to try to stay away from them, keep your accounts current, and get the balances down. Where do we want the balances? Where it says the balance will remain low. Ideally, we'd like them at 10% of the limit. It's very difficult, I understand, for a lot of folks that carry balances. Getting them to 50% of your limit will help a bit. 30 helps a lot more. 10% is ideal. So that's where we try to get the balances to. Now, there's ways to address those balances on your credit cards with little or no money. One way to get your credit card balance to 30% with no money would be to see if you can get a credit line increase. We had a buyer not long ago. We had a Capital One credit card with $1,000 limit and a $980 balance. Well, that's maxed out. It's really hurting the score. Well, they didn't have the funds to get it to 30 or even to 50% because they needed that cash for down payment and closing costs. So they called Capital One at our recommendation and got a credit line increase to $2,500. They got me a document that said your limit is now 2,500. I sent it to the credit bureaus, and in 3 days their score was up where we needed it. No money was required by that buyer. Even though we get charged when we do a rapid rescore, we don't pass that fee on to the buyer. So that's one way to get your balances down without any money. Another way would be, let's say you have four credit cards, two of them are maxed out. We've had buyers do this many times, transfer the balance to the other two, some of the balance, to even out your credit. You have the same amount of debt, but if you spread it out and get them below 50 or 30%, the increase comes with the score. So that's another way to do it. A third way might be to find a mistake, and I'm still seeing mistakes from time to time, especially with department stores. A lot of times, department stores report the high credit, not the credit limit. So if you have a department store card and your high credit means that's as high as you've ever charged. Let's say it's $891 and your balance is 700, but it's not reporting your credit limit of 2,500. because it's only reporting the high credit. So I'll say, hey, find out what your limit is, get it for me. I get the limit reported and get the scores up. It's reading the wrong data. The credit card, the department store is not reporting the credit limit. I see Yetta put a question in. Was that a soft pull for the credit? Yes, very good question. So she's asking it when you tried to get that credit line increase, was it a soft pull? It was a soft pull. So examples of soft pulls are you go to annual credit report and get a free copy of your report. Just prior to closing, every mortgage company has to do a soft pull to make sure you didn't buy new furniture. Um, and Credit Karma is a soft pull. Credit card companies, they reserve the right to do an account review. It's in the fine print on the credit card application. And they go in and look at our report and raise their limit without us asking, or close our account for inactivity, which could hurt your score. So that when they do that account review, it's a soft pull. So they're going in and saying, all right, does this person have too much debt? You think we could raise their limit? They're doing a soft pull. Good question. So other things that we do to help buyers is negotiate. Down the bottom here, we coach them. You tell them how long you have one 30-day late. It killed your score 45 points. Call them. Tell them you've had the account for 10 years. We can give you the date opened right on the credit report. You've had it for this long. You've never been late. Kill them with kindness. Tell them you were out of town. Come up with a reason for the late and ask for a one-time courtesy removal. I got samples from all kinds of companies. I got samples from a mortgage company, from Macy's, from Discover, from Capital One, giving it. They don't always do it, but a lot of times they will give a one-time courtesy removal. And then the second part is negotiate with those collection agencies. I mentioned in the beginning that paying a collection could hurt your score in the short term because now the date reported becomes more recent. We want it to be removed. Now, sometimes we can pay a couple collections and get a small increase in the score, but in general, I would say we really want to try to get a removal letter. And we're going to show you some sample rapid rescores shortly to show you the impact of getting a collection removed completely. Here's a sample removal. Look at this. The third paragraph. As a courtesy, we have submitted a request to remove two delinquencies. So not only did they give a one-time, they removed two as a courtesy by simply asking and being nice and smiling before you dial. So the reason I put this sample in here is this collection company will not give us a removal letter. Their policy is they don't do removal letters. And I know that because I have 6 removal letters from them. But the only way we could get this removal letter is the buyer struck out with them. So we told them to go back to the original creditor, Professional Pathology. That's who she owed the $44 to, which she didn't even know she owed. Go back, they hired SCA. Go back to them and tell them you didn't know about it. You'll pay them if they'll contact SCA and get us a removal letter. It says we, FCA, have received a request from our client, Professional Pathology, to have this account deleted from your report. So we struck out the collection agency and had the buyer go back to the original creditor. So there's ways, even if we're unlucky with the collection agency, to try to go after the collection. So this is really good for buyers. Pre-application checkup. What you can do, and I'll go backwards on this slide. I'm gonna go to number 6 first. Go opt out, like we told you. Opt out so you don't get a bunch of phone calls. Go to annual credit report number 5. Get that free copy of your report. Get some kind of monitoring. Take advantage of the free ones that the credit card companies offer to protect yourself from fraud. I literally 15 minutes before the class started, I got a text. If I could show my text on the screen, I would, but it says, hey, Uncle Mike, I have a couple questions about identity fraud and credit. Someone opened a bank account in my name last week and applied for a Gemini credit card in my name. What should I do? So I see fraud every week. My sister-in-law called me 2 weeks ago. She got a letter in the mail. She was denied for a credit card. I said, "Oh no, what happened?" She goes, "I didn't apply for it." Well, the reason she got denied was that she had a credit freeze on her report and they wouldn't approve her. And we'll talk about freezing and what you should do to protect yourself. But be mindful of fraud. Take advantage of the free monitoring that the credit card companies offer. Um, Number three says leave a small balance. So if you're one that uses one credit card and pays it off every week, that's all, I mean, every month you should, if you have the ability to pay it off. If not, I mean, if you are going to apply, you want one credit card with a small balance, believe it or not, just to show some recent revolving activity. Um, doesn't seem to make a lot of sense, but they know you're going to pay your car loan because you'll lose it if you don't. They want you to prove you can pay a credit card. Disputing accounts, I mentioned, go to annual credit report first and get rid of anything so that we don't have to worry about disputes on your credit file. And then closing accounts. Oh, don't close. We had a buyer not long ago. He had 3 credit cards, which is a good number of credit cards to have. And he closed them all before he applied. He thought that was the best thing to do. His score dropped 80 points. If you close seasoned accounts, ones that have been opened a long time, 4 years it becomes seasoning. When your credit card reaches 4 years, you get 15 extra points added to your score. So that's the key number. Don't go and close a bunch of accounts. If you have too many accounts and you need to close some, always close the ones open most recently. Leave those older seasoned accounts open and use those old accounts because, as I mentioned, those credit card companies can go in and do a soft pull, an account review, and close it because you're not using it, and your score could plummet 15 points or more, depending about what else is on your report. So these are just some good things that buyers should and shouldn't do to get ready before they even get started with us. These are pretty self-explanatory, but our loan officers give this to our buyers at application, I believe. Um, don't change your job if you can avoid it. Don't move a lot of money around because it has to be explained or make major purchases because that could hurt your qualifying. Um, Try not to deposit cash because you're going to we got to figure out where that's coming from. We just talked about closing credit cards and applying for new. Don't want to do that. And try to disclose everything you can. We don't want surprises at the end. This one really just emphasizes that even if your score is very low, don't feel discouraged. We can find a way. It may take more than 3 days, like the rapid read score. It may take 3 months. I just closed, or a loan officer that and I were working with a buyer that it took a year and we just closed them. And it was a big loan. It was $500,000 loan. He was a veteran, had lots of collections on his report. So he didn't have the resources to address them all, but he was able to settle them over time for less than full amount. And we coached him to get us the deletion letters. And he went from a 515 score to a 650 score. And it took a year because he didn't have the money to settle the collections all at once. But he's in his house now. So we were able to clear up a lot of those items over time. But the key was getting deletion letters, not just paying those collections. I also had someone in Richmond, Virginia with a 491 credit score that we got up to a 620, and that person closed as well. So even if they're really low, but I'm also looking at scores that are 750. If we can get them to 760, you could get a discount on your mortgage insurance, homeowners insurance, maybe even get a better interest rate. Um, so even the higher end scores I'm looking at to try to get up even higher.
And you've said this a few times, and it's on the screen here about how important it is to regularly check your credit reports. And that goes back to that website that was on the screen. We'll have it at the end as well, just so everyone writes that down. But just making sure that everything is accurate and up to date. I think in that example, things that they weren't aware of what was going on with their account, and that's what was causing issues with their credit. So just making sure again that you're regularly checking and just being more aware of what's going on with your credit, because for a lot of people there are a lot of things going on that you had no idea. So Mike, you've done a great job hitting on that. So I just wanted to reiterate that for everybody on the call about how important it is to just have a
Yeah,
better.
it really is. I mean, I'll give you another example. My sister had surgery at a hospital, a few years back, and she was trying to get a home equity line, and she called me and said she got denied. I said, why? She said there's a $4,000 medical collection on her credit report. She never got anything in the mail, never had any notification. She would have known had she been going to annual credit report and checking her report, she would have saw it. But it wasn't supposed to be there. Her insurance number was off by one digit. So the radiology department at the hospital just slapped a collection on there. They thought she didn't have insurance because it didn't go through. So she didn't even get notified. So unless you're checking your report and, take advantage, it's once a week. You can do it frequently. Make sure there's nothing going on there that you're not aware of.
Exactly.
This is why we're not going to the real new scores yet, because this is based on the mortgage scores. And what it is a graph that shows the predictability of scores. We don't know the predictability of those new scores yet because there's no data there they're starting to look at data now and comparing it to these scores. But what this chart means is that 1 in 4 people with a 620 credit score will have a late in the first year. It may not be on their mortgage, it could be on their car loan. 1 in 5 with a 640, 1 in 10. As you can see, 1 in 20 with a 680. The higher the score, the less the risk. So that's why we have risk-based pricing. That's why you get a better rate if your score is higher because you're less of a risk. So it's really unfortunate. You would think we could give these folks that have a low score a better rate to help them get back on track, but we're less of a risk, and it's really based on whether or not you're going to perform, and they don't want the loan to go into foreclosure, and it's less likely if you have a higher score. And your score could be anywhere from 300 to 850. Um, I've only seen one 850 in a mortgage score. I've seen some 850s in the consumer scores. Um, but very hard to get an 850 mortgage score. Very hard to get a 300 mortgage score. You got to work to get that 300. I've seen one in the upper 300s, like 380, um, and I've seen one 850. So this just gives you an idea of why the scores are and why it's so important across the board, not just for a mortgage, but when you see on TV, there's new car commercials, 0% interest on your new car. The bottom of the screen, if you pause it, you could still not read it. It's so small, it says, provided your credit score is 760 or higher. That's where you get the zero interest rate. So when we help a buyer get their scores up, we're helping them with everything across the board, a better interest rate on just about everything. So homeowners insurance look at scores, mortgage, and everybody's looking at scores now. All right, this is a pie chart that basically comes from FICO, comes from my FICO, which is a place you can subscribe to that gives FICO education. They give you a free score every month. They give you a free credit report. They give you monitoring, but I think it's like $40 a month. But in any case, this comes from there. I subscribe to my FICO. Not I don't pay. There's a free one as well. There's an app that you can get. It's my FICO. By the way, I get apps for all three credit bureaus and with my FICO. And I have them all on my phone. And I texted them to my niece and told her, get these apps and go freeze your credit report right away. Go to annual credit report, get a free copy of your report, make sure there's no new reports, put a fraud alert on your credit report. I gave her all the steps already this evening on what to do. Um, and I sent her an email with some flyers with some websites. But in any case, this comes from my FICO and tells you what makes up your score. 35% and 30% is this. In my opinion, this applies to the higher end scores, FICO 8, 9, and 10. I look at mortgage scores all day, and my pie chart is 50-50. High balances on credit cards is 50 and bad stuff, whether it's a recent late, a collection, a bankruptcy, that's the other 50%. I target those two things almost 100% of the time when we're doing a rapid rescore to get buyers' credit scores up. We talked a lot about this already, the soft and hard inquiries. The big thing about this one, though, for consumers, you don't have to worry when you apply for a mortgage. Remember, I said all those inquiries are identified for the purpose. So they all those mortgage inquiries only are ignored by the mortgage scores, not the consumer scores, for the first 30 days. So it'll have zero impact for 30 days, every mortgage score. Also, everything's grouped within 30 days. So if you go to 5 car dealers this weekend, they all pull your credit. 5 inquiries will show on your credit report, but it will only count as one against your score. So there's a 30-day rule that protects us, and that goes for every industry. This is a great website, for fraud. I just sent this to my niece. Um, you know, what to do after annual credit report. You still have problems trying to get things fixed online. You can call those phone numbers, fraud alert departments. If you can't get it done online, we're going to show you the websites here shortly. Um, you can go ahead and this is the fraud report websites. She just put a fraud alert. By the way, you only have to call one of them. By law, they have to tell the other two to put that same fraud alert on there. And basically, I told her, just put alert, do not extend credit without calling me at this number. She said it's only good for a year because she has to have a police report to get it to stay there for 7 years, which is fine. She doesn't have a police report. She put a 1 year fraud alert, and they told her they would contact the other two bureaus. And I think the next slide is freezing. Yep. So you should put a freeze. It protected my sister-in-law 2 weeks ago. That person who tried to open an account in her name, that company went to pull credit to approve her, and they can't see her credit or her scores, so they denied her. It says your application was denied because your credit is frozen. So that person who tried to open an account in their name, in my sister-in-law's name, got stopped in their tracks. So it's a good thing to do. Just be careful when you lift your freeze. We had a buyer not long ago when he went to take the freeze off of his Equifax, he put the wrong information in by accident, and they said, please mail us proof of your identity. So he couldn't unfreeze his Equifax until he mailed them proof because a freeze is, a fraud protection. So they thought someone else was trying to unfreeze and put in wrong information. So just be careful when you go to unfreeze. Sometimes if you had trouble in the past and your score is 490 or 520 and you've cleaned up, we told you go settle the charge-offs for less than full amount. We had somebody recently with a 3,000 plus charge-off with a Wells Fargo Visa, and they settled it for $800. So a lot of times they'll settle those charge-offs, but your score is still stuck in the low 500s. You need to reestablish credit, and these are good secured cards where you put a down payment, that's your credit limit. They will turn it into a regular Visa after 6 months of good activity. It's a way to rebuild credit, and sometimes maybe even start out this way if you have no credit and you can't get a regular Visa. I think there's a question or a message.
Uh, there was something in the chat. Iris is asking about the recap.
Oh,
I
okay.
answered that for her. Yes.
Gotcha. You can skip through this one. I didn't want to touch a lot on that. You can skip through. I want to get to some examples while we still have a few minutes. Just skip through to get to the first rescore.
So I did have those, I took those out from the main presentation. So if you want me to share a specific one, we can get to that at the end if you'd like.
Yeah, we're not allowed to share all of my secrets,
Yeah.
but we can give you particular slides if you just let us know which ones you want. Most of them we can share. There's a couple from FICO I'm not allowed to share. That's why Peyton says we can't share the entire PowerPoint. About 10 years ago, I shared my PowerPoint and someone stole it and gave it to another mortgage company. We don't want that to happen. Yetta's hands up.
Hey, Mike, I just have a really quick question. I have one buyer, and her question was, I think she has like an old judgment on her credit, almost 7 years coming up. How do you think she should handle that?
So it's not a judgment because judgments and tax liens are no longer on credit reports.
Okay.
It's probably a collection.
Yes.
Um,
Okay.
so if it's a collection and it's coming up on 7 years, just be careful. Sometimes they'll fall off because the statute of limitations is 7 years, but keep in mind it's 7 years from the date of last activity, not the date it was opened. So it may not be coming up on 7 years, but if it is, sometimes they sell it right before the 7 years. And then they zero out it and it says transferred to another creditor, and now you have a new collection. So I'm a big fan of trying to settle it for less than full amount and getting a deletion letter as opposed to hoping it'll fall off. But excuse me, I'd be happy to look at it and give you my opinion on it if you like.
Okay. Thank you. And second, customer, client, she's in a chapter 13. How was that handled?
I'll show you. We do have a slide coming up with a little
Okay.
chart that we can definitely share with you. Um, and this slide we can share as well. You can go ahead, Peyton. Oh,
So
was that the last one?
I just had it in here just to open it up for questions,
Okay,
but
let me share. Can I share for a second?
yeah, absolutely.
I'm
Please.
going to share the slide about bankruptcies since that question came up. Let me go into mine real quick and I can pull it up pretty quickly here. At least I think I can.
If not, I can see if I can pull that within our
Where did
slides.
my presentation go? It's not on my screen. I think it got rearranged or something.
While Mike is pulling that up, I do want to open it up to questions. I know Yetta was doing a good job of asking a whole bunch, but is anybody in the chat or in who's on have any questions? I know somebody had their hand raised earlier, unless Mike just did a super great job about answering them.
All right, I think I found it. Hold a second.
And I can also hop into those slides for you, Mike.
Yeah, you know what? For some reason, I'm missing my credit essentials, but I found it. But for some reason, the shortcut is off of my desktop. But I got it here. Hold on a second. I have to create a new shortcut. All right, can you see my screen?
Yes, we can see it.
All right. Oh, I didn't want to go here, but I'll get to that slide. Bear with me a second. These are sample rescores that we won't have time to go through them all, but we can pull up a few of them if we have time here. But I want to get to that bankruptcy. Bear with me a second. All right, here it is. So across the top, if your buyer had a short sale, foreclosure, Chapter 7 or Chapter 13, or they're in a Chapter 13, and now they're trying to get one of these loans down the left column, you slide over and it tells you the wait time that you have before you can get into a new mortgage. You can see over here, you got to be out of it. You can't do it while you're still in it. But this gives you the time frames for all these different types of loans, and they're different depending on the loan. But Peyton can share this out to you as well. Does that answer your question, Yetta?
Yes, it does. Thanks, Mike. I appreciate it.
Sure. And then there's another slide that we could share that gives you the maximum seller contribution on the far right that buyers, um, it's a really nice little sheet to have, different types of scenarios, and then the maximum seller contribution for your buyers. Do you want me to show a couple of the rescore examples,
Yeah,
Peyton?
I think if you want to share a couple of those key examples, I'm not seeing any questions in the chat, so we still have um about 10 more minutes. We don't have to go to the full hour, but if you want to share a few
Yeah, I'll
examples.
show a couple recent rapid rescores that we did. This was November of last year, a few months ago. This buyer had a 556, a 563, and a 576. Well, every lender, when you apply for a mortgage, has to throw away the highest score and throw away the lowest score, and the buyers get qualified on whatever happens to be the middle score. In this case, it's 563. So we're trying to get this up over 620, maybe 640. The higher the better. But you can see down the bottom, this buyer was a young buyer with two new credit cards that were open in August and July of last year, just starting out. They weren't late, but they're over the limit. Their balance is 510 on a $500 limit, 309 on a $300 limit. Not good. Even though the buyer said, I already paid them down. I said, get me proof. He got me a letter from Cap One. It shows their balance is $5.85. He got me a letter from Credit One that shows the balance is $9.11. I whited out his name and account number, before I whited them out, sent these to the bureaus, and 3 days later, you can see the time. This one was 11/4, we pulled credit. And on 11/5, 1 day later, he's got a 688 score. And you see the balances are $9 and $5. So from a non-qualifiable to all the way to a 680 because two credit cards weren't showing paid yet. Um, and that's the thing. If you pay your card off every month, doesn't mean when we pull your credit report, it's not going to have a big balance. So it's ideal to check your report to see what's being reported up front. Another reason to go to annual credit report. Here's one that, we got a 598 score because that's the middle score because we throw away the 631 and the 589. And there's a collection for $210 and a Capital One account that's pretty far maxed out, 458 with a $500 limit. Buyer paid that down to $126, and we coached him to get a deletion letter for that collection for Sprint T-Mobile. This isn't a medical collection. It's not going to disappear when it's paid. We got to help him get it removed by coaching him to get this deletion letter. And we got it all the way over 700 from 589 to 726. Makes a huge difference. Jerome could tell you how much of a difference, right, Jim? Jerome, from a 589 to a 726 opens a lot of doors, right, Jerome?
Yes, it does.
Jerome's a loan officer in our Virginia Beach office. He's very good, and he can help any of you agents that are on the call or buyers that are on the call. He's very good and knows all the grants as he stepped up and talked about the Section 8. He knows about that, knows a lot of the first-time home buyer grants. And him and I work closely together to get scores up every day. So this is a really good example from a 589 all the way over 700. And we have lots of samples like that.
Hey, Mike.
Yes.
Yeah, I was able to advise someone based on your tutelage earlier this week about, I think the question was they had like a late payment that, and I was like, well, my understanding, you could probably reach out, ask for a one-time deletion based on on their goodwill and your history and blah, blah,
Right.
And
Right.
I felt good because I only heard it from you like Monday or Tuesday this week because I didn't even know that.
Were they successful?
Yes, yes, they were.
They got, oh, see, that's really
Yeah, it
great.
works.
Yeah, that's all. Who was the creditor? Do you remember?
No, I didn't even ask. It's like a, general question. I was afraid to like pry, but I just recall you showing us one and it actually
Awesome.
worked.
Awesome. Here's one, 618 middle score, and this late was recent because this report was in May of 24. This is from July, so it's like, 9 months ago. It's really hurting the score. And Merrick says, as a courtesy, we've submitted a request to remove the delinquency from September. Just like that. Get rid of that late and you're over 640 by getting rid of that one late. Yep, so it definitely works. And thanks for that feedback. I appreciate it, Yetta. That's all I had. Peyton, if you have see any other questions or anybody else has any questions?
I'm not seeing any questions. Before we wrap, any last minute questions, feel free to unmute. I think I gave everybody the ability to unmute. I'm not seeing any hand raised. So, thank you everybody for joining us today and hearing Mike speak about our opportunities with credit and how you can potentially improve your credit. Like Mike mentioned, we have a team of amazing loan officers here at Southern Trust. So if you have direct questions, they are a good starting point. You can visit our website, southerntrust.com. We'll be sending a recap out shortly. If it's not by tonight, it'll be tomorrow morning. We'll send that out to everybody on the call, as well as anybody who registered. If you know somebody who may have registered and missed it, it will also be available on our YouTube. So we'll make sure that everybody has the opportunity to watch and ask questions in the comments. So again, thank you all for joining. I know 6 p.m. was a little bit later than our normal trainings here, but we hope you have a great rest of your day. And thank you again for joining us. And thank you, Mike, for
Sure
sharing.
thing. Thanks, everyone.
All right, well, have a good night. Thank you, everybody.